busy morning in the City of London. 2 years ago, few of these finance executives had heard of pricing optimization. But now some of the world's leading banks are using this technique to gain a dynamic insight into their customers and the shifting marketplace.
Pricing optimization takes a look at both what is the risk implications of a set of prices, how are they going to impact incremental profit, but very importantly, how are different customer segments buying different products through different channels going to react to the prices.
The award-winning Nomis Solutions is the recognized leader in this field.
Price optimization is an analytical technique to help banks set prices better. In other words, to really say, we are going to enter these markets, we are going to generate revenue here, we're going to generate profitability here, we are going to be a leader in the customer's minds here. They really have to get the pricing right, otherwise they can't do it.
As the global credit squeeze continues to make the headlines, traditional pricing methods based on risk or competitors' rates, for example, can be slow and untargeted. Here at the London Stock Exchange is where the global economic downturn has been showing itself. But pricing optimization has become fundamentally important to a growing number of leading companies who want to see, understand and respond quickly to the twists and turns in the global marketplace.
Abbey National, Halifax Bank of Scotland, Ford Motor Credit, the largest auto finance lender in the world, has adopted this technology. And fundamentally, this has seen a very rapid growth over the last 3 to 4 years, to the tune of 80–90% adoption rate year over year. And the amount of assets and liabilities that is being optimized by companies in the market today has reached right around £80 billion a year.
A common misconception is that pricing optimization is a way to simply increase prices.
And that's simply not true. Simply understanding demand elasticity, understanding markets, understanding the behavior of your customers might mean that for some segments you increase price, for other segments you decrease price.
And that dynamic analytical approach is key to the strategic advantage of the Nomis Solutions technology.
The past 2 years we've seen a strong level of adoption through both here in the UK and internationally of this capability to deliver better prices to the right consumer segment at the right and most appropriate time. And I think we provide a solution where we enable laser focus on a particular consumer segment or a particular portfolio that the bank is managing and be able to give them exactly what they need.
And customers have noticed other advantages too.
Particularly I think of most organisations which have several people responsible for pricing, where they are taking multiple factors into account, often over several weeks, to come to a new price decision for the consumer. To compress that using a piece of software which is dynamically understanding how long and how many factors need to be taken into account for each consumer price decision is a great bonus for the industry.
By being able to price accurately, the chances on you getting the customer to buy the product increase exponentially. More customer products, bigger percentage of the customer relationship, longer relationship, more profitability per customer. That's the bottom line for price optimization.
This will become, I think, part of the core makeup of the way lending and other businesses make their money in the future. In just the same way as credit scoring and risk-based pricing have become the norm, so too will price optimization.
The global economic downturn has raised the bar on how the finance industry understands and responds to its markets. Nomis Solutions is helping many to thrive in this increasingly challenging landscape.